Are you tired of always seeing the same old investments? Do you want to add a little spice to your portfolio this year? Welcome to Love Your Investments, the show where one lucky contestant gets to speed date 3 alternative investments and decide whether any of them could be a good match for their portfolio. Let's meet our lucky contestant, Louise. Give us a wave. Louise has been in the investing game for a little while now, but wants to shake things up a bit with some investments that aren't her usual type on paper. So, let's take a look at our 3 eligible alternative investments. First up, we have our venture capital investments. And it's your lucky day, because investments like these aren't typically available to your everyday investor. But apps like SoFi, which is designed to help you do more with your money, give you the exposure you need if you decide private equity is a good option for you. Venture capital investments are typically high risk, high reward. So prepare for this one to keep you on your toes and make sure you're both financially and strategically prepared for any potential volatility. Maybe don't tell your mom about this one straight away. By investing in startups, pre-IPO companies, and private credit, venture capital investments like being on the pulse of new opportunities. A potential great match for those looking to add a little entrepreneurial spirit to their portfolio. If you want to bag yourself a property mogul who isn't distracted by constant site visits and tiring tenant issues, this could be your ideal asset. Real estate investment trusts, or REITs, allow you to invest in property with relatively small sums of money without having to actually manage the property. Hey, some people really love the hands-off approach. REITs isn't necessarily making the big bucks, but they are possibly the better bet to introduce to the parent than venture capital. But don't expect anything flashy for Christmas or birthdays. Louise, meet our final alternative investment commodities funds. More specifically, commodity funds including precious metals like gold, silver, and platinum. Although I am sure you'll come up with your own pet names further down the line. As with any new investment, make sure you do your background checks and examine the objective and strategy of these funds to ensure you understand what you're jumping into. Now, don't let the bling fool you. Funds that primarily invest in gold are typically stable if you can stick it out over the long term. They may have commitment issues initially, so expect potential volatility, but if you can weather the storms, they may be a suitable companion. There's only so much of these assets to go around, so they get their value from their scarcity, supply, and demand. And while that might feel like a red flag, historically, that has meant that this asset typically performs well in times of economic uncertainty. So, Louise, you've now met our 3 alternative investments. Which one will you be adding to your portfolio? You know what? Scratch that. I've thought about it, and actually, why should you have to pick just one? You should be able to diversify your portfolio with as many spicy investments as you would like. And today is your lucky day, because with SoFi, for example, you can get exposure to all 3 of these alternative investments and many more like foreign currency, private credit, hedge funds, and natural resources, where once these investments might have only been available to wealthy or private investors, everyday investors can now get access to them too. So you can build the right portfolio for you. To find out more, check out our article on alternative investments on Finder.com by clicking here and follow the link below. If you enjoyed this video, like, subscribe, and hit that bell button to be the first to know when a new video drops. Thanks for watching.